Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel for our next topic after the close. I am your host, Kevin Horner. Really glad you all joined me. And there is the bell in my ear. We have completed our Thursday session. And we're going to get down to business looking at a few charts this afternoon, try to lay the foundation for tomorrow, a little bit ahead of the drama. We will be hearing from Fed Chair Powell tomorrow from Jackson Hole. Some traders anticipating a little bit of fireworks tomorrow. We'll see how that plays out. But what we're going to do today is take a look at how we finished. Then we're going to look at a few symbols, leaning into the scan tool a little bit, working from our watch list that we try to hit up for you here in this particular class. And then we're going to look at some of our example trades that are already in the account that might need to be managed or at least eyeballed to see how they're performing. So we got enough to get to cover a good 35 to 40 minutes. We'll see how that goes. So thanks to all of you for being here. We are joined by Cameron May there in the chat. He'll keep an eye on questions and comments that I'm unable to get to, but obviously I do want to address those. So please feel free to post for the duration of the show, everybody, as I do try to bring your questions and comments into the mix. So if you're not already doing so, you can follow Cameron and me on X, Cameron May CS and Kevin Horner CS. A great way to find us outside of the classes that we host for all of you, and also a good way for us to engage with you back and forth. You know, if you leave a question, we're very commonly going to reply there. So that's a good way to do that. Especially if you've got specific questions that you might want to get answered. So please follow us there. And of course, if you like today's conversation, we would appreciate you hitting that thumbs up button down below, folks. It's a really good way to let us know how we did, but also a good way for us to get a little added boost in the YouTube algorithm. And of course, we're going to get this class archived for you after a quick review. So hope to have that done early tomorrow morning. Now, we'll move to our disclosure so that we can jump into the discussion here, everybody. Please remember that our conversation is exclusively for your information and your education. Simply put, we do not make recommendations. We do not make endorsements for individual stocks, an approach to trading the market. Ultimately, what we're trying to do here is give you many things for consideration, things that traders incorporate, and hopefully some of those pieces resonate with you and you can incorporate them in your own process, comfortable with your planning and the amount of risk and detail that you are looking to take on. We will discuss technical analysis, obviously, as we always do in these classes. We look at a bunch of charts. We review support and resistance and trends and the like, but it's important to remember that technical analysis is merely just one viewpoint that traders will use as an incorporation for decision making. We discourage you from making decisions exclusively based on technical analysis. Our last note will be regarding options. Please bear in mind that options are a higher level of risk. They are not suitable for all investors. You do need to be approved for option trading in each individual account in which you would like to trade options. You can have varied strategies, varied approval levels amongst those different accounts. We will ask you to be familiar with the characteristics and risks of standardized options. And while we work here in the YouTube channel in a demonstration or a paper money version of the Thinkorswim desktop application, it's important to remember that there are some key details that differ from real world scenarios and real world examples, especially as it relates to options. So I want to cover this very quickly. Just remember that when you are the seller of options, we will never, in a paper money version of the Thinkorswim desktop, have early assignment on options that you are short. However, this can occur in a real world scenario. In fact, we often state that when you are the seller of an option as the opener of a transaction, remember that you are obligated to do something. If you are the seller of calls or puts, you're either obligated to buy stock or obligated to sell stock. It's important to know that, and it can also happen in advance of the expiration of the option contract. So while that won't happen in paper money, it absolutely can happen in real world examples. So please keep that in mind. Okay, let's jump to the Thinkorswim application, as our screen will let us know. Let's look at some potential trade examples, but we're actually going to start with just a look at the SPX. And no, Rice Bird, I did not bring the crystal ball because, hey, I really don't know what's coming here. Let's be honest. What we've had from the market has been quite consistent and we've been working against the 20-day moving average. Certainly happy with what we've had out of the broad market here, right? We've been above the 20-day moving average for the majority of the last 4 months or so. Now, we've had some deviations there. Yesterday's candle surely was a bit of a fearful one, I'm sure many would suggest, simply because we did trade well below the 20-day there yesterday, but bulls stepped in and carried us to the close, and we closed above the 20-day. Now, today, looks like we're going to consider to be closing below the 20-day. The 20-day is at 63.81, and we finished at 63.70. So are the numbers of days below the 20-day stacking up? Very minimally, right? So could we be said to slowing the trend? Yeah, it could be pointed out. We certainly have a bit of a bearish divergence with the RSI below. As price made new highs, RSI made lower highs. So we take that to note that ultimately maybe we just go sideways instead of carrying our trend. But really, it could be said that that's exactly what we've been doing here for the better part of the last month or so, right? We did break through an area of resistance right through here. We did come back in early August on the 1st. That was a Friday morning, opened beneath it, and then finished the next day right back above it. So, we've kind of been meandering sideways, as I like to use that word, but really no true breakdown just yet. And so if you've been attending the classes that I've been leading here, many of you know that we're talking about commonly the 50-day moving average. The 20-day has been held for a long window of time. It's not at all uncommon, everybody, for us to maybe find support at the next layer of the trend line, the dynamic trend being the 50-day moving average. We've basically been above it since May 1, and our opportunities for a test have not even come to pass, have they? We haven't yet really visited the 50-day. The closest we came was back there on August 1. Our low was 62.12, and our 50-day moving average was 61.30. So, we were still 80 points above it. As it stands right now, we're about 110 points above it or so, right? Compared to the 6260 ledge. So we've been above the 50 for quite some time. So now the question is, do we maintain the trend? Do we make a higher or a lower high, And the way we would monitor, traders are going to just maybe move that line down to these 3 tested areas, right? You see it right here. 1, here's 2, and then there's a third that was from the August 1. So let's just activate and put that line there. That gives us a horizontal ledge of potential support just shy of 6,200, everybody. According to where I put it, well, I guess I put it right at 6,200. So we'll keep an eye on 62, everyone, because a move through the 50-day that maybe gives a similar candle to what we had yesterday that shows that maybe we bounce at 6,200 and close back above the 50-day, that could look like a successful test. That remains to be seen. But ultimately, the trend's gotten a little bit tired in the month of August. If we were to apply some study details in here, we could note, whoops, wrong study. I've got one with labels on it. There it is. So year to date, the SPX up just shy of 8%, but we're only up about 0.5% here on the monthly basis. And on the weekly, we're down 1.25% after having peaked there last week. So just to give you all some general insights about how things are shaking out in the broad view of things, we've had some breakdowns in technology that have managed to still maintain the lows in here, consistent with the 50-day, of course. Year to date, up 9%. Month to day, off about 1/3. This week, though, we've shaved almost 2.5% in the NASDAQ 100. And a lot of that selling has been linked up with, go figure, technology, which has managed to pull back appropriately here as well. Not so much so that we've found a major moving average just yet. We are below the 20-day for what could be considered day 3. But that stands out because, again, day 3 compared to the NASDAQ below and the S&P below has been a little bit, less consistent, right? 3 in a row stands out for technology. So Some traders might look at this as some kind of confirmation that maybe the short-term trend has run course and are waiting to see, can we get a bounce in and around that 50-day moving average. So what we've got, obviously, is a bit of a precarious spot. Now, the reason I say it's precarious isn't so much tied to the price action of these big indices, right? The S&P 500, the NASDAQ, even the tech space, but it's likely leaning into what we're expecting tomorrow. We are going to be hearing from Fed Chair Powell at Jackson Hole, and that can obviously have an impact on markets movement. In fact, I have a feeling that today was one of those really lackadaisical days where we had a complete inside day today in the NASDAQ. We traded within yesterday's entire range here, and I think we did the exact same thing on the S&P, and we sure did. The today action entirely encompassed within yesterday's. So these are very decent illustrations of the patience of traders today, the unwillingness to position in advance of any Fed commentary. And so that's not a shock. We would take that to mean, quite simply, that the market's waiting for the same thing that Fed Chair Powell likely is, more data. In this case, we're going to lean into what he's got to say tomorrow on inflation and the potential for the rates to be cut. I know there's a lot of anticipation for rate cuts coming in September. We are still looking at better than 90+% in terms of how the traders are positioning for a potential rate cut come September. But none of that really means that it has to happen that way. And we traders are certainly going to very likely parse every single comment that comes out of Jackson Hole tomorrow. All right, so today, what we are going to look at, I've got these two watch lists, and I know it's been a couple of weeks since I've been with you as I was traveling out to New York and Chicago and consecutive weekends there. Let's take a look at our 20-day pullback scan. And I'm going to remind you, as I like to do here, we offer, of course, the playlist for this class is available there on the YouTube channel, and you can go back in time and find these older sessions. And I think that's a good idea. One, you're going to get two great sessions in the last 2 weeks with my man JB, which everybody wants, obviously. Everybody loves listening to JB. So check those out. But you can also go back and find the instances where we were applying new trades, building new example scenarios, and the thought process in building them. A little later, we are going to go in to the monitor portfolio and our example trades, and we're going to look at a couple that are already in place. In the meantime, we're going to jump to the scan tool, and I'm just going to remind you of a couple of key components. I'm going to my personal breakdown here for the 20-day moving average pullback, and ultimately, what I've done is take this scanning in the S&P 500 specifically, but of course, we traders, we have our preferences. Some of you might want to scan in small caps. Some of you might want to scan in the NASDAQ composite. Some might want the NASDAQ 100 only. But even if you are going with a broad-based sector like that, you can always get a little creative and incorporate a specific industry as well. So if you've been, for example, watching healthcare, and healthcare has changed a little bit. In fact, let's just take a quick look. I got the watch list detail here. Here's healthcare. So this is just as an example of what traders might be thinking about. And we're not going to lean into healthcare specifically today, but I wanted to bring it up because you notice that we've had a little bit of a move to some levels of note, right? So we've had a move through some highs, right through here, and I want to straighten that out with just a trend line. There we are. And 2 days above this spot where we've kind of struggled, right? We've been here and pulled back, been here, pulled back, been here, pulled back, we're here, pulled back. Here we are above it. So maybe this last 2 days in healthcare is notable for us. That could be helpful. If that's the case, some traders might just take that scan tool, applying the standard detail, looking for stocks pulling back to their 20-day moving average, and utilize the S&P 500 and intersect it with an industry group like healthcare, just as an example, right? Just an idea of the way some traders might think. However, I do want to point out that when I'm thinking about it with healthcare, because healthcare is not really trending yet, right? It's been kind of struggling. We are above a 50 and 20-day moving average, but we aren't in a trending situation. So you may not very well find stocks that are trending like what you're looking for. With a 20-day moving average pullback, ultimately, we're looking for stocks that are in the midst of a short-term uptrend that have taken a breather, 5 to 8, maybe 10 sessions, and pulled back to a level of support, the dynamic moving average, in that case, the 20-day simple moving average we were striving for. But because this is a group that isn't trending yet, maybe what you're looking for is more of a leadership component with a stock that's an indication of locating stocks in healthcare that are maybe trading at 2-month highs or 3-month highs, kind of like the space is. And if you can find those stocks trading above the blue 200-day moving average. Why do I say that? Well, because the whole healthcare sector is largely negative here. If I were to extend my chart after I'm going to put my standards back in here, add another layer here, go 2 years in length, you'll see that the healthcare peaked in September of last year, and we're basically pushing down. We've basically been pushing down for the entirety of that year plus, right? So we got to make note of that. I say September. It was actually, I guess it's just about been a year. So with that look, downtrending scenario in the entirety of the space, some traders want to look for stocks that are already above a 200-day moving average, already upward trending. Perhaps moving to new short-term highs could be a little bit of a leadership concept if you wanted to scan for that. Now, we're going to keep it a little more simple here, working with just our 20-day moving average pullback to locate stocks that have just made that short-term drawdown to that area of potential support. And what I did was I'm going to go ahead and hit the scan button, and then the scan loaded over here as well. So I loaded it in a watch list tool for me, everyone, which basically means it's a watch list that's going to update for me. So let me show you this real quick. I went into my personal list, selected the 20 DMA pullback right here, and I know that it's a dynamic watch list because of that target right there. That pink target tells me, I've got a scan working. So what this will do throughout your day, everybody, if you're watching the market live, as your scan comes up with new criteria, new stocks hit that criteria and become accurate for the scan, they get added to the list. And as the stocks that are meeting that criteria are suddenly not meeting that criteria any longer, they get booted from the list. So, couple of key components. What are we looking for? We just want a stock whose close is above the 20-day simple moving average. We also want them to be in the midst of an uptrend. So we're looking for stocks whose 50-day simple moving average is above their 100-day simple moving average. And I think I've got that one extended to incorporate something else. Let me see. I sure do. So 50 is greater than a 100-day, and a 20 is greater than a 50-day. If I hit edit, you'll see what I'm talking about there. So I've edited this custom study locating just a simple moving average with a length of 50 periods greater than a simple moving average of 100 periods. All right. So we have an intermediate trend. It's uptrending, and it is a faster moving average. So you would expect to see a 50-day above a 100-day. In that case. And then down below, we did the exact same thing, except we used the faster moving averages. The 20-day is greater than the 50-day. So by combining these components, everybody, what we're getting is likelihood of stocks that are showing us a series of higher lows and higher highs. Okay. So that's how we created the original scan. The big key to ensuring that we're locating stocks that are so-called testing the 20-day simple moving average is that we want to see the low trade be under the 20-day and the last trade be above it. So this would give the appearance of that so-called test of the moving average, or in this case, the 20-day. So let me share this with you all because I often get requests to share these. I'll share these in the show notes as well. Remember, please, that these scripts for scans, these are not a guarantee for accuracy and certainly not a guarantee for timing. And we do not recommend their use, but I think they can be really instructive and educational for you, especially if you're working on creating your own scans or maybe learning a little bit about the scan tool itself. If you utilize the scan here and start to play with some of that criteria, customizing it, tweaking it a little bit, you may very well find a scan that works and suits what you're looking to accomplish. So the last thing I want to highlight here as it relates to the watch list itself is that if you select that watch list and click the link there, we can be alerted when the scan results change. So click this link and you can tell this, yes, whenever a symbol gets added or when a symbol is removed or either or. If you're watching the market live throughout the day and you are leaning into some of these scan watch lists, this function will give you the heads up. So symbol is added or removed, notify me. So maybe you need to be notifying me with a chime or some kind of play a bell, play a song, play a sound, etc. You can do that right here as well. So some really good functionality in the desktop application of thinkorswim. And I wanted to make sure that I covered that because some of you were nice enough to point out that I hadn't mentioned this before. And it's an excellent feature within the thinkorswim desktop so that if you're watching all day long, you can be notified when you start getting adds or additions or subtractions from the list. Now, I do have a few individual symbols that I thought might be important to check out for potential opportunities today. We're going to see if it's still on the list here. Globe Life sure is. So let's go ahead and I'm going to change my chart to just a 1 year. Look at what's happening most recently, everyone. And what do we have? Well, this is not exactly a screaming chart, right? We do have clearly an orange 20-day moving average that's above a 50-day. A 50-day is above a 200, likely implication being it's above the 100 in there somewhere. But the real component that stands out here is that, as I zoom in, everyone, today we did have a test of the 20-day. Today's low was 138.77. And the 20-day moving average is 138.79. So today's intraday low caught wind of this one. I got to say, that's kind of a lucky development because when you look at it here, some traders would say that this lack of this last 2 days of price action kind of dictates the potential scenario here, right? We've been a little bit below the 20-day. There was 1 day beneath, day one here, day two here, day three, day four, right back above it. Wiley is calling out the potential to hold. Yeah, let's see. Which one of these days was our low trade? Was it this big red candle day? Our low was 135.03. Nope, it was the next day, 134.78. So technically, Wiley, we got a Cahold day. Whoops, wrong draw. Got a Cahold day on that move right here. An extension yesterday. And then today is day two above the 20-day moving average and also breaks the downtrend line off the peak. So some traders might look at this as an interesting setup and could consider taking a new position to either go long the shares, owning the shares of the stock, or potentially building some kind of option strategy based on this. Now, some of you would be more comfortable working with the underlying shares, in which case we might look at the low we created just this week at 134.89 or so, 135 approximately, and put an exit strategy beneath it. So there's always a couple of ways to do that. Many of you know that if we lean into equities, we could simply buy the stock and put an exit order, a stop order, beneath 135. That can work. Some traders would be comfortable with that. That's about based on where the last trade is today, about $4, maybe $5 of risk to the downside. And then, of course, traders want to know, well, what is my potential for upside? Well, that is always the fun part. Well, let's take a look at what really created this move. It was the July 23rd after market announcement that happened on the day here. And then we opened the next day with this beautiful candle. Now, I say beautiful, we did open a little bit lower, but that created essentially a flagpole. And some traders might use the height of that flagpole to define our potential upside opportunity. Looks like it's just about 20 to 21 points. Now, this is where all traders are a little bit personal, right? We all have our preferences. So some traders will take this flagpole, and just for ease, I'm one of these traders who doesn't like to do the math. I'm just going to start drawing my lines. Some traders would build that line from the base of the flag. Other traders would build it from the break of the downtrend in the flag. The truth is, it's your call. Measured moves are not a science by any stretch. In fact, there's certainly no guarantee to be achieved. But if we're hopeful of a potential $20 move from the base of the flag, then our target suddenly is up there around 155. And you know what? We can tell an appropriate story there, right? Because if we're stepping into a position, ballpark at around 140 a share, and targeting $15 of upside while risking $5 to the downside, well, now we've got an appropriate risk versus reward for what many traders will consider. The reason being, we want to make it really simple on ourselves, everyone. We want to consider that if we're risking $1 in the market, we should be making or looking to profit at least 3 times. Is it feasible that if we're risking 5, we could make 15 to the upside? Well, some traders would say the math shakes out properly here and does support that. And, you know, the reason is real simple. If we step into every single trade risking $1 to possibly make 3, well, then we're putting the trade odds in our favor. That if we're right half the time, which is pretty consistent, how frequently traders are right about half the time, well, then now we're working to build proper risk versus reward into our strategy, and it can result in not needing to be right all the time. So just bear in mind some semblance of risk versus reward. Remember, if you're right half the time, and every time you risk $1 to make $1, then we're just spinning our wheels. We don't want to spin our wheels. We want to move forward. And that means we got to take some profits, got to have those opportunities. So let's build an example with equity here that has us buying shares on a trade as long as we take out today's high. And the reason I say that is that we would like to see some continuation of this. Now, this could be a little bit aggressive, right? For some of you, you might say, I don't like the idea of buying first thing in the morning if we trade through a certain level. But ultimately, many traders believe that by breaking that flag portion or the downtrend off the peak, we've already got the optimistic viewpoint playing out. The bullishness is working itself back into the trade. So we'll consider an exit under 135 and a target at about 155 for some shares that we will buy on a trade above, let's call it so the high today was 140.41. So we could just do this by, you know, a percentage if you want, or you can just round up. Maybe some traders just say 141, which is going to give them the confidence that this might very well be heading the right direction, which is, of course, we got to make a new short-term high to even be heading the right way, right? So that could be the first indication of that. So what we're going to incorporate is a buy stop with OCO bracket. So that means we're not going to be a buyer at the market open. We're only going to be a buyer if the stock trades through 141 to the upside tomorrow at some point. And I know a lot of you are uncomfortable with the idea, and we are going to make this a day-only entrance. So if this doesn't happen tomorrow, if it doesn't trade through 141, then this order will get canceled thereafter. If, however, it does trade through 141, We then have a market order to purchase, and we will buy it whatever the market rate is. Could be 141. It could be closer to, higher amount. I mean, if we open tomorrow at 143, we're going to execute pretty close to 143, right? We're not going to execute at 141. So remember, even a buy stop is not a perfect order. It doesn't guarantee our price. And just for our purposes, after, right, here we go. I'm making this good till canceled on my exit. Remember, we said we're going to target 155, and then we're going to look for a stop exit under 135. There are many variations. For our purposes today, we're actually going to go below it and we'll call it 134. In prior classes, I have discussed the use of ATR, average true range. I'm going to skip that today, but don't hesitate to go back into the playlist and find that, everyone, where we talk about ATR and how helpful it can be. We definitely have benefited from using ATR in the past, some good trades. So we'll skip that for our purposes because I want to move on to make sure I cover more detail today. So we're going to go in for a buy stop only if we trade through 141. Subsequently, our limit is at exit for 155, or if we break down under 130 at 134, let's come down underneath just that by a couple of pennies. That'll give us a little bit better likelihood of staying in the trade. This way, we've got an opportunity to exit. No guarantee of price. Once more, a standard scenario on that stop order. So we're going to place that for tomorrow's business. All right, just a quick review. Buy as a 141 stop. Exit at 155, exit at 133.97 stop. Okay, good. Got what we want out of that. I wanted to also talk about another one on the list is Conoco. Now, this is an interesting one because like many of these securities in a downtrending scenario, we are running into an area of potential resistance. A couple of things stand out here. You've got prior resistance at the 200 here. Give me that. There we are. Prior resistance at the 200. Prior resistance at the 200. So it's not like we haven't been here before. We do see that we've struggled a little bit to get through not just the 200-day, but this ledge at around 97, 98 or so, right around here. So we may have a possibility for a breakout scenario as well. This is also tightening up a little bit. Notice how the 50-day moving average is upsloping. We've been through the 20-day all over the place. This could be another buy on a breakout scenario where traders wait for it to trade to new short-term highs. Now, the last trade today is at 94 and change. Waiting for 98 could be a little bit, would put you into lots of patience, right? You might not be ready for that move tomorrow, but that was kind of interesting. Given that we're below the 200-day, a lot of traders would walk away from a trade like this on the long side and simply allow the stock to either break through resistance to the upside and consider going long, or break through support to the downside and then consider going short. And I think that makes a lot of sense here because we are just stuck with higher lows and matching highs, lower highs, etc. Really haven't gone anywhere in the last week plus. But let's look at another one though. I've got Western Digital on here. Yeah, and this one's, this is an interesting one because when we look at Western Digital, we notice the 20-day moving average just cruising right along, held every step of the way, all the way back to April 23rd. And, this falls into technology, and it seems to be holding up a little better than the rest of the tech space. Remember, when we looked at technology broadly, we noticed that we were below the 20-day 3 consecutive days. So maybe bulls are feeling emboldened here, even though we noticed that we have taken the stock under the 70 line, under the overbought conditions in RSI. The RSI to play out here is a wonderful reminder that overbought conditions can last one heck of a lot longer than you realize. I mean, basically, we were in overbought in Western Digital for 3 months, and the stock kept making new highs. Well, here we are under consolidation for the last 2+ weeks, but we haven't broken down. In fact, we tested the low just yesterday, right there, right? Tail, 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 all these lows holding up. So for our purposes, let's consider a quick, how about a long vertical opportunity here, everybody? Let's look at an example trade, buying a long call and selling a call out the money in the hopes that we can make that maneuver. So we're trading at around 75, and our most recent high was around 78.80. The opportunity here could easily be to see $80 a share. And so some traders might be looking for maybe a $5 wide spread, a $75 strike, long call, followed by a short $80 call, which would give opportunity for a $5 move to the upside. And the recognition here is by capping our upside at 80, well, now we're capable maybe putting on a little bit more of an affordable trade. So we're going to, first of all, I want to make sure that we're not looking for any earnings. Okay. So we don't have earnings until October. So as long as we go forward into one of the standard periods, we might have something to work with. Now, some traders aren't going to be comfortable going out to the monthly expiration in September. That is 29 calendar days. So you're looking at 4 full weeks of time. If you're not comfortable, you can always give thought to going a little shorter in nature. But I think some traders are wanting to ensure that you have enough ample opportunity to mitigate any short-term volatility. If this is in fact a leader in a space that has been leading and we're undergoing pressure broadly, but this one is showing some relative strength by holding its moving average, maybe the traders want to stick with it a little longer. So we're going to look at a 75 call, and then we'll cap our upside to 80, and that's going to reduce our cost. So yes, we are looking to limit our upside chances by, instead of buying just the long call to own the contract for just shy of $3, it's only going to cost us here about $1.80 to own that. And remember, if we are targeting a $5 spread, well, then the opportunity for profit is the difference between what we cost, or what it cost us, and $5. So in this case, our profit would be about $3.18 opportunity if we were to close over 80 before expiration or on expiration. So that's the thought process there. Some traders might want to look at something a little in the money, a little deeper than the 75 that I've selected here. You can always do that. Just recognize you go down to 70 and now your cost is going up quite a bit. All right. So yes, your cost goes up, but some traders might prefer the opportunity because the 70 contract is also going to be higher delta and thus a greater likelihood of being in the money at expiration as well. So for our example, we'll stick with the 75. And yes, Tanya, this class is being recorded, so you'll be able to catch this probably first thing in the morning, I would imagine, as we get this reviewed for you. But we're going to stick with this, and we're going to set this up. We're going to go with a little bit of a padded limit, so I'm going to bump this up to 190. So when I say padded limit, that just means I'm giving the opportunity for the stock to move a little tomorrow morning and allow us still to put on the trade. Okay, so there we are. We're going to go in at a limit of 190 for this long vertical call spread. And as I hit confirm and send, you'll notice that our max profit becomes 310, our max loss 190, assuming we do not take ownership of any shares in any way. So we'll go ahead and put that one example in for tomorrow's business as well. And then I wanted to peer briefly at a trade that I put on a couple of weeks ago already, and it looks like that ALLE has moved against us. Yeah, so we have simply a long stock position in ALLE, Allegion, excuse me, and we'll go ahead and take a peek at this one. I do have a sell order in, so when we bought this, we did apply a stop exit. Here it is, everybody. Let me clear out my draw set here so we can eliminate what's going on and really see the forest for the trees. But ultimately, we took position let's see, where is my trade? Here we go. So we took position right here. And so basically buying on a breakout and set a stop beneath the 20-day moving average so that we could work to maintain the position. And so far, that has worked out. We do have an exit, and I just want to point this out, everybody. Our exit strategy is on the downside to sell the entirety of the position. However, if we rally to the limit at 181, our exit is for only half. This way, we can hopefully get taken out of half of our position for profit. And when that occurs, we then will revisit the position and look to raise that stop. Because if we get taken out at 181, the biggest, most important secondary factor becomes raising our remaining stop, the stop on our remaining shares, so that we can take advantage of any additional upside, but also make sure we don't give back profits that we took when we sold the 50. Rita, that's a great quick question. Let me just highlight that for you. And as I'm going to do this, we'll wrap things up today. It's under the gear icon where we can apply the position to the chart. But bear in mind, for now, showing trades here, if I'm not mistaken, I believe this is still highlighting only equity trades, everyone. So in the future, we might expect to see these applied for option positions as well. But for now, I believe this is exclusively for equity. So it's under the general and display, just put a check mark in show trades. And of course, if you want to see the open and existing orders, you want to do that right there, show orders. All right, so that's going to be it today, everyone. We'll have to wrap it there, but good news for all of you that have been waiting for my return. We don't go back on the road until mid-September, so you've got a few weeks here with me on the Thursday show, so we'll look to follow up, hopefully taking advantage of that WDC example today and the GL example today as well when we reconvene next Thursday. So thanks to all of you for being here. Thanks to Cameron May in the chat. Really appreciate the ongoing conversation, of course, in the chat, everyone. So thanks for maintaining it as such. And remember, follow us on X, Cameron May CS, Kevin Horner CS. If you'd like to engage with us outside of the classes that we host for you, X is a great way to do just that. So with that, I'll wrap it up. Be with you tomorrow morning for Trader Talk in today's market with my man JB. We are working with ETFs tomorrow. That is a live class only. If you've not had the opportunity to see the Friday Trader Talk, I strongly encourage it because it cannot be archived. So love to see you there live, bright and early at market open, everyone. Thanks for being here. Have a great Thursday. See you again real soon.